Good morning, everybody. Welcome to today's 1Million Strategy Roundtable for Entrepreneurs. 1M1M is the first and only global virtual accelerator for startups. Our goal is to reach help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP and 10 million jobs. And in support of that mission, we do these free mentoring roundtables pretty much every Thursday. And this is our 359th session. These have been going on since 2008. And, we've had a chance to work with a wide range of entrepreneurs from a wide range of countries and cities and every corner of the world, really. And it's been fascinating to see what people are working on. The event is being recorded. If you're live tweeting the show today, please use the hashtag 1M1M. Our Twitter handles are at 1Mby1M and at Romana. And we publish a lot of interesting substantive content through these channels. So please feel free to subscribe if that's something that you want to learn from. And the 1M1M Roundtable channel on YouTube has all our prior recordings of these sessions. It's a phenomenal body of work that is available for free for you to also learn from. So if that is something that you want to use as learning material, you certainly can. Now, this is a roundtable, not a broadcast. We want everybody to participate. And these are the call-in numbers. I will put the slide up a bit later. We're not quite ready for call-in yet, but we're always ready for you to participate through the public chat. Make sure you set your chat to send to all participants. Do not send me private messages because I will be anchoring the show from here on. And until we get to the Q&A section, I can't really dialogue with you in the public chat and pick up your private messages and definitely not provide you with technical support. So if you need technical support, you can send private messages to Maureen, but not to me. So we are going to start today with a conversation with Vaclav Muchna from Czech Republic. He's the CEO of Ysoft. Vaclav, welcome. It's great to have you here.
Well, hello, good morning, everybody, and thank you for having me.
So Vaclav, tell us about Ysoft. What do you do?
So Ysoft is a software company. We do enterprise software. We started with printers, so that's, I would say, a very niche market. What do we do with printers is that in corporations, when people want to print, usually your documents would be sitting on the printer, everybody can print, and then if you move to another office or if you travel visit somewhere else, another office, you don't have the print driver installed. You would have to install a print driver, go to IT, whatever, and of course it's very cumbersome. So what we do is that we do a system that's called SafeQ, and we make sure that users, when you print, your print jobs are actually stored somewhere, and they are only printed when you go to a printer. You swipe your card at the printer or enter a PIN number, and then the print jobs are printed. So the whole idea is that you are there, you're in control, but not only that, you can go to virtually any printer in the system. So even if you travel or the printer you normally print at is occupied or broken or something, out of paper, you go to any other printer, you swipe your card there, and we route the print jobs, your documents, to that particular printer. And of course, we do much more around that, cost recovery for schools, even for companies. And that's where we started. Later on, we moved to also workflows. So what we do on workflows is when you scan a document normally, you typically scan to email, you store it on your desktop. You may work a little bit with the document, and then you upload it to your ERP system, enter some metadata. We eliminate this processing on your workstation. So we integrate the multifunction devices directly to the ERP system. So the workflows is you go to the machine, to the MFD, you swipe your card. Based on who you are, you have your workflows predefined. So maybe you are HR and you scan an employment agreement, or you are finance and you scan account payables, or you're in a warehouse and you scan delivery notes, whatever. So you say this is the type of document you scan, type of workflow, you add metadata, and we route the document directly to the ERP system. And the last thing is about 3D print management. So we expanded from the world of 2D into the world of 3D, and we do pretty much the same with 3D printers as we do with 2D printers.
So Vaclav, one question is, when did you found the company? And two, I know that you founded this company sitting in Brno, Czech Republic. What triggered this idea? How did you come across this opportunity? How did you settle into this particular business, especially sitting in Brno, Czech Republic?
Okay, so the company has been officially started in the year 2000. I was 20 years back then, 20 years old, still at the university. I worked as self-employed even before that. In 2000, I set it up a limited liability company. And what I've been doing, I used to be a developer, so I've done basically software, custom-made software. So if you need something, you would just call me and I would do it for you. And I had a couple of colleagues from the university, of course, working with me. The team was somewhere around 4 to 8 people, fluctuating. And what we've done is, next to this custom software development, we actually participated on development of other projects where there were entrepreneurs who wanted to bring their product on the market, but they didn't have the software development skills. So what they would do is that they would give us a little bit of money and a share on that particular project so that we are motivated to do the job better. And we've done 5 different projects like that. And all of them, every single one of them failed. In 2003, the last project actually didn't fail, but we had a partner who cheated on us and who stole the whole thing. It was a terrible situation, and I was this close to give up. And my partner came back to me and he said, like, no, we're not going to give up. We're not going to give up. We didn't give up for 5 years. We're not going to give up now. So he helped me to get over it. The funny thing about this is the next day he realized what really happened, and he came back and he said, like, yeah, you're right, let's give up. And I was already sort of over the depression, the worst depression. I said, remember what you told me yesterday, we're not going to give up now. So that's how we survived. And in 2003, the next thing was, we had a customer who came back to us and they said, we want to deploy central printers in a hospital. The hospital is using 200 local printers on every single table, but they are very expensive for operating costs. So we want to take these local printers out and we want to put their central network printers, maybe 20 instead of 200. They're more expensive, but they have significantly, like 10 times lower cost per page. But the trick is, in a hospital, of course, employee data very sensitive. So they say we cannot allow patient data to sit on a printer where anybody has access to, and they couldn't find any solution for them. So they approached us and they say, can you develop that? So we did, and then we thought, hey, wait a second, this is interesting thing. The consolidation of printers. That's inevitable. That's where the market goes. So maybe there is going to be more need, and we actually worked a little bit more on that idea, and we came up with a product, and that was the first product. So we transformed the company from a custom software development, from a service company, to a product company, and that's how it started. So to sum it up, what I say, to entrepreneurs, there are 2 means how you can come up with your thing. The first one is you're not Bill Gates, you're Steve Jobs, and you have your idea how are you going to transform the world. And despite the fact that the world doesn't want what you're bringing, you convince the world that this is the right thing to do. The bad news is that the chances that you are Steve Jobs are not that big. So then, and that is my case. So then the other option, how you come up with that, is that you go onto the market and you listen. And you get the inspiration from the market by listening. And that is also sort of the first test for your product, because if you hear this idea on the market, you already have sort of pre-validated ideas. And so that's our story, basically.
So, you know, the strategy that you described of getting a project effectively, some customer telling you that this is my problem, this is what I want to do, and the entrepreneur saying, I will build this for you. This is a very, very common way that companies have been built. And as a matter of fact, when the customer is willing to pay you to build the product, and maybe it's a services project to begin with, but you may keep control of the intellectual property and turn that into a product subsequently, this bootstrapping with services method of building product companies is a tried and true method. And for those of you who are familiar with the 1 million by 1 million program, you know that this is something we emphasize quite a lot. We use this all the time in the program. And we have case study after case study of entrepreneurs who have been successful building very significant companies using this strategy. And probably the largest company that had this kind of an origin is Oracle. So please do make a note of that if you're looking for an effective bootstrapping strategy, this is one of the most effective strategies out there. So, Vaclav, what were some of the hardest parts of building the business, and especially building the business from where you were?
Well, I think there were sort of two milestones. The first milestone was to find the right thing to do. And if you figure out what I just said, I really started back in 1998. And we came with the product in 2003. So in our case, it actually took 5 years. The company almost bankrupted because somebody else did nasty things to us. And getting over that and having the belief that you'll find it, you'll figure it out, I think that that was the first part. What tremendously helped me is that I started really young. You know, at the age of 18, you have nothing to lose. You don't have your mortgage. You don't have family to take care of. So, you know, I'm saying, you know, you sit on a very low-profile chair, and if you fall off this chair, it doesn't hurt it much. Every year after, you start to build your life level, right? And you start to have, you get a car and you have a loan and you need to pay the mortgage and you have a family and you have kids and then forgot that. I mean, of course, exceptions do exist, but your chair is much bigger and you have much bigger risk because you're thinking if it's not going to fly, how am I going to feed my kids? How am I going to pay their education and all that, right? So, I'm not saying don't start that if you are older, but I'm saying you don't need to wait, and there are advantages, right? So if you start late, of course you are more experienced, and I wish to know what I know now when I started, and I didn't know anything. I've never worked anywhere else than in this company, so it was a lot of bumps on the road, and I may have avoided them if I would work somewhere else, but I encourage people to start young. So the first thing, to go back to your question, I digressed a little bit, sorry. So the first milestone was finding out, and my message would be, you know, it's very unlikely that the first thing will take off. And you know what, it won't. Most likely it won't, and you need to try it again and again and again. And if you have this character, you are probably a good entrepreneur because that's the approach you need to have in your business. And that always repaid me because nothing came easy. It was always this bulldog, you know, approach that you try again, and you try again, and eventually it happens. And the second one for us, when we started to grow, of course, we've never been financed by venture capital because when we started, there were only very few venture capital firms available in the Czech Republic, and the reaction was, oh, you're not internet company. Oh, you do also hardware. Oh, no, we're not going to finance that. So actually, to produce the first units, I had to take a loan where I paid 40% interest rate. And this shows how much I believed or how much I didn't understand, whatever you call it. So getting over that, then eventually after a couple of years, we started to have very positive cash flow. And when we were big enough, so we attracted international venture capital money, we already didn't need them. So getting over that was a little tricky. But the next milestone was really from an Eastern Europe, getting into Western Europe. And the big challenge for us was that Eastern Europe is perhaps known for maybe cheap labor price, but not for Western style of business. So if you would outsource, if you would offer cheap labor from the Czech Republic or general Eastern Europe, it's okay, everybody takes that, and they have their expectation. But when you bring innovative, high value-add product that represents a mission-critical system for companies, I mean, imagine that our software doesn't work and the bank cannot print your mortgage agreement. So it is mission-critical system, though it is just printing. Then they are saying, and how this company is going to support that. And how would I characterize that this approach from Eastern Europe is, give us second chance and we do it better, and we always do it great on a second try. And the Western style of business is we don't need to have it great second time. We need to have it good on the first time. And understanding that approach and breaking the barrier, that took another like 4 or 5 years. And once we did it in Germany, and we had a reference, and we started to have a strong position in Germany, then it was easy. But these were the two main milestones.
How long did it take you to hit the $1 million annual revenue milestone?
Oh, so the first year, and I need to recalculate it from our currency. So the first year we've done 4, second 12, third year 36. So third year we did 1.5. Okay.
And then how long did it take you to hit the 5 million milestone?
So let me pull up calculator. So 5 million divided by, let's say, 25, so that would be 200. 3 million, 4, 5, 6 years, 7 years, something like that.
7 years. And all this while you were doing this bootstrap because the Czech VC funds would not touch a hybrid enterprise software hardware combination.
Yeah, well, look, yes, the answer is yes, but around $5 million, that was the time when we generated enough cash flow that we started to have positive surplus in cash flow. Of course, the company was profitable, but from quite early stage. But the important thing is when you grow, and our sales cycles are very long. An enterprise segment, it's easily 1 year, right? So you start, and your costs are all upfront because you do the technology evaluations, you do proof of concepts, and then you do rollout, and then you get paid, right? So your costs are completely upfront. So you need to hire more people to handle all that load, and that was difficult. But around the $5–6 million, we started to generate cash flow strong enough to have surpluses that would allow us to invest in the working capital and sort of stabilize. So around that time, we started to feel like we started to have the first, venture capitalists talking to us, even from the UK. But we started to feel like, do we really need it now? Maybe not. Why would you give the shares for free now? Now that's funny. I say that as a venture capitalist, and I guess we'll talk about our venture fund a little later. But it's a very ambivalent role.
So we have a saying in the program: VCs love to come to the rescue of victory. So once you were at $5 million in revenue and generating enough free cash flow to grow, that's when the venture capitalists wanted to come in.
It's all about risk management, right? Risk mitigation.
So where are you now, and what are the key levers of growth? Where to from here?
Well, right now we are $30 million. What I'd like to do is I want to grow the company by order of a magnitude in 10 years. My approach is really, it depends. If you are in, US, where you have so many super fast-growing companies, compared to them, our growth is pretty slow. And I say,
but it's organic growth, right? You have no external money. You've done $30 million with organic growth.
Yeah, well, so that's why I say it depends from which angle you look at it. So if you look at it from the Facebooks and Snapchat and all these Uber things, yes, then we are growing fast, but without venture capital. My way is to one step at a time, do it rather slow. That's another advantage when you start young. Look, today I'm going to turn 37. So at this age, I already know a little bit about business, and I still have, 20 years to build a company, knowing something and having some good start. So I expect the growth to 300 million, more organic. We did some acquisitions in the past, and I found them extremely difficult, especially because we are a company with very strong culture. And absorbing, eating, if you will, another company means how are you going to transform them for your culture. And I always make sure that it is possible that these companies are not culturally far away. But even though I thought they are very similar, it is still much more difficult to do that than I thought. And
one second. Maureen, somebody is streaming echo into the call.
Call in user 6. Okay, so grow organically. We expand with product. So 2 years ago, we started to transform the company from a single product, this 2D print management, into a multi-product. This was another interesting story because I thought, okay, simple, right? We established a new R&D team, we developed the product, and there we go. And I thought it's for 1 year. We are third year, and eventually we are launching the product right now, so everything took much longer. So we are expanding in product. We are, as I mentioned in the beginning, we're venturing into 3D print management. I think it's the first company in the world. The workflows, and we have some other things. One mistake I've done is that a couple of years ago we really were very profitable, so we started to see the millions of dollars pouring on the account, and we were thinking what are we going to do with all that money? And excuse me, I had never had a feeling like I need to have 2 yachts or 1 yacht or whatever. I want to grow the company, so I said, well, let's reinvest it. And we went too wide. We lost focus, and we started to work on so many different projects because we were excited. Now we can do it. We have all the power. We have the money. We have people. Let's do it. We just hire more people. We lost focus, and that was wrong. So then we went through the stage of refocusing, cut off some things, choose, okay, these are the 3 main areas where we are going to focus on, 2D scanning and 3D. and work on that. And since then, yeah, we are progressing more. So really, it is organic growth, multi-product, and we have tremendous opportunities in our core business as well. We have some fantastic partnerships with companies such as Konica Minolta or Xerox, so one Japanese, one American, and we grow with them, so there's a lot of opportunity.
And they generate a lot of the leads for you?
Yeah, so the way how we scale actually, I position myself to be a technology company, and I say do one thing and do it right. So I say we focus on technology, and we're not focusing on sales and support. So we engage indirectly. We only sell, and vast majority of our sales worldwide is through Konica Minolta and Xerox and alike. And they do actually support. So the first level support, they go and they install our products, they take the calls, and if they don't know how to troubleshoot, they escalate to us. So we only do second, third level support. That has some disadvantages. You have significantly less control over the sales cycle. So all the forecasting is much more difficult. But the tremendous value is it allows you to scale. And the other thing is they are global. And I think we would never build a globally operating company if we try to do it ourselves. But the thing is that you need to realize where is the headquarters, right? So here in the US, it would be Xerox. So you need to figure out, okay, we need to work with Xerox here in the US, get the relationship and roll out the relationship from here to the rest of the world. Or with Konica Minolta, it was in Japan, right? So get the relationship. But how you get it, right? So you start in your region, you go from your region, from your country to the regional headquarters to another headquarters. Eventually you get to the top, and then you go back from top down. We've done the same thing with KM, we've done the same thing with Xerox, and this is working pretty well. And it allows us to really scale because you have the reference. You don't start new countries from scratch. You start new countries where they have within their group other people who are familiar. You have the references, you have the validation, the business model, the success, and that helps tremendously.
Yeah, so that's one of the reasons why you've been so profitable, which gives us a good segue into your activities with startups in Eastern Europe. Talk to us about what's happening in the startup ecosystem in Eastern Europe and what role are you playing there?
Yeah, so let's start with the role. A couple of years ago, when I said we had all this money, we didn't know what to do about them. So one of the things we said we were going to do is we established a venture capital fund, a very small one. It's about $6 or $7 million. So it is really very small, tiny, very focused. And we said, let's work with the community if they have good ideas. And it really started like, there was one startup and we gave them money. And I liked working with them because in the meantime, my stuff got already like 300 people. So it's more, it's inevitable, you go corporate style. And I like it, to be honest, I like it. It has a lot of advantages. But I also missed the startup culture when things happen overnight. And that's not possible in a globally operating company with a couple hundred people. So that was kind of what brought me there, and I thought, like, I want to do a little bit more of that. And then we realized that funding startups that are B2C, the consumer market, we don't provide any value add. So we focused only on B2B with global approach. And it's another thing. A lot of startups we are meeting with, speaking of the situation in Central and Eastern Europe, a lot of them are not global in their minds. They say they are because investors want to hear that, but their hearts are not like that. They actually treat export as an opportunity to get extra revenue. So the first thing we're trying to identify those who are primarily focused on building the global company by heart. And there are surprisingly not that many of them. I mean, once again, everybody says, oh, global, absolutely. But do your actions, the way how you think, the daily life, the way how you build a company, is it ready for it? Do you speak English or do you speak Czech internally, right? And that tells a lot. So that was another thing. The situation in Central and Eastern Europe, a lot of startups like everywhere, right? You must not take me absolutely seriously. I'm a funny person, I would say. So I tend to say the reason why YSOF has a venture capital is if you are an successful IT entrepreneur, you need to have venture capital, otherwise you don't exist, because everybody has one, right? It's just the trend. So there is a lot of new venture capitals. I think there is a lot of money available, not that many ideas. Ideas are good, but that market lacks two things. The first is sales, and the second, even worse, is marketing. And that region is terrible in these two things. The region is fantastic in innovations, technology, you know, the technological part, they can do miracles. It's really very powerful, very smart people there, but they lack these two skills, and that's a disaster, and we try to help them bring that back, bring these two things. And just from my own experience, when I tried to hire a marketing director to YSOF, I tried for 2 or 3 years, and our marketing director actually sits in San Francisco. I couldn't find anybody. The marketing team is actually in the Czech Republic for the most part, but the marketing director sits in San Francisco. I couldn't find, and we had international European candidates as well, but they were specialists. You know, they know what is online, they know what is events, they know what is PR. But finding out somebody who has the bigger vision, the integrated marketing, put all these things together, that's very difficult to find there, and that limits what the community, what the startups can do and what they can achieve.
So what, you have invested in a bunch of companies in your region. What kinds of companies are they? Give us some examples.
Right, so the focus from our side is B2B, global, and the third buzzword is IoT, Internet of Things. The reason for that is very simple. We also produce our own hardware, card readers, the authentication devices. So we have quite a lot of skills in hardware development, but also we have our own production line, prototyping capabilities, the logistics, the certifications, and all that. So in this segment, in IoT segment, which combines actually software and hardware, as a venture capital, we can provide the biggest value add in globalizations, but also bringing the hardware stuff out there to the market. And so this is our focus. One example, a very successful company called Savio. They actually do indoor localization, so it is like indoor GPS, if you want. And what are the use cases? So they are able, for example, to navigate drones in warehouses to go and pick up the goods, right? So that's one application. Or another one is then they can locate people in a warehouse. Warehousing is a big thing for them. And working with extended reality, they can navigate person, go straight, turn left, and take this thing from the shelf. So that tremendously optimizes the warehousing. Or another application for this technology from a totally different segment is on the concerts, where they are able to locate the performers on the stage, and the lights can actually automatically light them as they move on the stage, right? So that's another interesting application. Another interesting application of this technology is where you have a machine and you want to make sure, because the machine is dangerous, if the machine is, if somebody gets closer to the machine stops, right? They call it virtual fencing. Or another one for automotive, imagine that you have a screwdriver and you are fixing, let's say, wheels on a car or another part. And there is a moment that you need to use, so you have your screwdriver that is for that particular car. If you take that by a mistake and you apply it on another car, that's a huge problem because you use different moment to tighten it. And what happens is that car in that moment has to go off the production line or stops the whole production line, and that creates a lot of cost for them. So what they do is they locate the screwdriver in the car, and the screwdriver is not going to turn on if you apply it on a wrong vehicle, right? Eliminating human error. So there are a lot of applications for that. So that's one of them. Another one, they work in network security. They do network behavior analysis. So they detect threats on the network using AI and machine learning. They actually analyze what is the standard behavior on your network, and they point out anomalies. So recently, we you just may heard of WannaCry ransomware. It took some time because antivirus cannot detect it until that is known threat. And they actually were able to detect that threat just because unusual things were going on the network. So they were able to point out a threat much sooner than anybody else. So that's another one. Another one is Lumitrix. What they do is they do outdoor lighting. So they have an outdoor projectors, and also now they have indoor. And what they do is, if you are indoor, you have an app where you say, you know what, in my office, when you enter, I want to show our Twitter, the work clock, and the news headlines, whatever. And you have like objects, you play with these objects, you put it on the screen. You can also, and you can do it also outside. So they have an outdoor unit where you say, you know, I'm shopping mall and I want to show whatever, some motives. It's Easter, so Easter motives, or it's Christmas, so Christmas motives, or some other advertisement, whatever. So they work a lot with lighting, integration with mobile phones.
So that gives us a flavor. That's awesome and very interesting to get a flavor of the young companies, not just Whitesoft, but also the young companies from Eastern Europe that are developing at this point. So Vaclav, let's move to the entrepreneur pitch session and listen to some people pitching from different parts of the world here today. So those of you who are going to be pitching, a quick, expectation setting. Remember, this is a working session and we are on your side. We have no other agenda but to help, address your strategic issues. That's the only reason we are here. You may disagree with feedback you get here, either from me or Vaclav or from the peer group in the room. It's really your venture. You decide what you want to do. You take the feedback into account, but it's really up to you what you're going to do with it. One thing you should remember, though, is not all businesses can raise money, not all businesses should raise money, and raising money does not equal success. So that's, that's a fact. You can't argue with that fact. So you have to, there are parameters on, to become fundable, there are parameters, there are requirements, etc. We are going to start with Shivanesh Shunmugam.
Hi, Shunmugam.
Hello, Shivanesh. Go ahead. How do you call yourself? Shiva? Is there a shorter name?
You can call me Shivanesh.
Shivanesh. Okay. All right. Yeah. Go ahead.
I would like to introduce my site. My name is Shivanesh, and I am the founder and CEO of DAVOVI Online Services Private Limited. Prior to starting this, I was working with companies like Siemens Enterprise Communication, and which are the global companies. So I was working on this particular enterprise ICT space for almost 12 years now. And that's where, before I get into DAVOVI, I wanted to just tell you a small anecdote. So today's startup scenarios, everyone is coming out with a technology aggregation platform to solve a particular problem into their industry. But then I realized that technology industry itself does not have any aggregation platform across the globe, which is more than $3 trillion in market size. Am I audible?
Yeah, go ahead. We're listening.
Acha. So you see, like, if you see about Zomato, Naukri.com, Facto, Book My Show, even Uber for that matter, everyone is creating an aggregation technology platform. But as I said, like, information and communication technology being a $3 trillion industry globally does not have an aggregation platform. The end users, the IT managers, or the corporate buying technology buyers from all over the world, they find it very challenging to source a supplier carrying domain expertise for the requirement against ICT. And ICT, you can call this particular ICT, information and communication technology, as a one jargon, but this particular industry has more than 100 sub-verticals under that, and which is more unstructured, unorganized. So the thought was, like, if we are able to club and organize the entire particular industry into one particular portal, people can able to easily navigate that particular supplier based on the geography, the area of expertise, and based on the buying criteria. They can able to evaluate, they can shortlist particular people, and they can get in touch with them, and they can evaluate based on the pricing or whatever it's on technology and things like that.
Okay.
So that was the whole module. So in short, what is DAVOVI? DAVOVI is basically a supplier discovery platform and an online search engine for the enterprise ICT industry. So right from your laptop, computers, to networking, your virtualization. Sorry, I'm getting too much into technology, but that's what this particular, it's a kind of, it makes a lot of people, it's a gray area for the people who do not have an expertise on that. So we are trying to club and create a classified platform to start with. That was the whole idea of creating DAVOVI. And from the supplier point of view, of course, people are talking about digital platforms, getting connected digitally over the world. So suppliers also find they have a lot of challenges, connecting to the respective client for their respective area of offering. And they are missing out on certain area where they are not able to be present at the time of requirement. So it's a kind of a chicken and egg problem we have. So we thought we will solve this on a global basis.
So there are a couple of points that I want to make on your slide that you have over here. See that the total ICT market is not your market opportunity. The total ICT market is the top-down market. The thing that needs to come here first and foremost is, how do you make money? Your opportunity is not the $50 billion or $3 trillion opportunity. Your opportunity is...
Coming to that, Samatha, if you are able to see the latest slide where you find the stage of 6, the procure to pay method, no, previous slide which was there. We are trying to take the entire transaction of procurement using our platform, being a middleman. Today, none of the suppliers, or there are two problems at the last stage of your process of procurement. The vendors are not getting paid on time, nor the vendors are supplying the customers, the buyers, as per the delivery. So there is always a problem there. And if there is a middleman who is able to solve this and make a kind of a build a kind of a bidding platform for and procure it using this particular procure to pay method, the entire transaction can be taken online using this using our platform. That was the whole goal. That's where I was focusing on that particular industry. Yeah.
You are aware that there is a lot of stuff going on in the procure to pay space, especially in the enterprise segment, right? The large companies have very sophisticated procure to pay platforms. We've done actually a lot of case studies
like
of...
Ariba is there,
hold on, let me finish.
Yeah, sure. Please.
Let me finish. We've also done case studies of vendors who are doing some very, very interesting innovation in the procure-to-pay space, but it is catering towards the large enterprise customers. So my question really is, from your targeting point of view, are you trying to do this for the mid-market or SME? Because I think if you say that this doesn't exist for the large enterprises, that is not a true statement.
So what I'm trying to actually build, see, this particular platform can be used for multiple reasons. Like if you say that a large enterprise customer, they can use this particular procure-to-pay method, and a small customer, even a SME, can use this platform for sourcing, and mid-size companies can use us for consulting, online consulting. So it's a kind of we are trying to create an ecosystem starting from your SMEs to mid-size to even large corporates. So that is the whole idea here. So we are trying to build an ecosystem around ICT industry as a whole.
Yeah, but what I'm telling you is that you would need to pay attention to what's happening in the procure-to-pay space, where all vendors of a particular enterprise are on a procure-to-pay system. So now you're trying to insert yourself in the middle of that. You're going to need to understand the workflow of how to, interface with those systems, and not expect that everybody is going to immediately adopt your platform.
No, I completely agree with you. That is why we did not, as on today, we have just opened up this particular DAVOVI as the sourcing platform, as a classified platform to gain. See, you cannot, once I start DAVOVI as a procure-to-pay, ultimately, it is not going to sail through. So that is why, to gain a confidence, we had 7 stages of particular strategies to grow, where we gain confidence by creating a classified platform. People gain tractions on that. We go online consulting. Then if we get enough traction on that, then we move on this particular bidding system, and if that gets successful, that's the stages we are wanting to progress. That is the whole idea here.
I would add one thing on this level, and Sramana, I pretty much would say exactly what did you say. So what I would add on top of it, my advice would be pick one vertical market and try to add value compared to generic systems, and try to add value, try to find your niche, because if you're trying to build something that's across all the vertical markets, fingers crossed. But if you pick one vertical market, it might be difficult from a regulation standpoint, or some other things where you may actually add value and differentiate yourself. That might be the better start.
Yeah, and I think Shivanesh, one second, what Vaclav is also saying is that within ICT is very big. As you put up on the slide, that it's 50 billion in India, 3 trillion in globally. So within ICT, there are many, many verticals, many sub-verticals. So you pick one that you really understand well, that you can automate somehow.
Okay, unfortunately, I got an experience of entire spectrum of ICT for the last 12 years. So I thought, let me put that into a real life digital platform. That was the whole idea here. I have noted your particular suggestion, feedback. Thank you so much for that. But what I was thinking is, like, see, ICT as a whole, it's a huge market, but it's a very niche market. So today, people, if you are giving a variety of everything on a common platform, that's where people, you get a traction that this is what is also available here, right? So that was the whole point.
Look,
I have noted your point, but your feedback on
nobody goes to the internet looking for ICT. ICT is the people looking for services or products within ICT look for a certain product or a certain service. They don't look for ICT. So ICT as a portal, it means nothing to you or to them, to your customers.
Here's what I would advise.
If you can visit my website, the entire ICT is, we have segmented the ICT under 150 sub-verticals. Under that, you will have a whole lot of product solutions and services against which the system integrator, the manufacturers, everyone is listed on that. That's what I was trying to tell you. So ICT, I'm calling this as an ICT platform, but if you visit www.davovi.xyz, you will able to find the entire classified, we have segregated this particular industry in such a way that it gives you a sub-vertical on that particular classified platform.
Yeah.
Hope you understand.
Here's one more.
Say something.
Yeah, please.
So here's one advice I'd give you. Find yourself a partner that is from a large company who has been doing procurement for 20 years. Give yourself the know-how from that segment.
Okay.
And I would even say that if you go in the large company direction, that is going to be harder because there is competition in the large company procure-to-pay space. There is competition, so you have to position this to some segment where there is less competition, and there is, there are customers who are doing substantial procurement, but the large procure-to-pay systems are too expensive for them, or whatever reason, they're not buying into those procure-to-pay systems, because there are some very, very sophisticated procure-to-pay systems that are out there, and large companies are rolling those out. Okay, so your other assumption is that suppliers are going to pay annual membership to be a part of your platform. Do you have validation on that?
Yes, we do. We do. I mean, okay, to put it on the other side, it took almost a year to build the product. After that, we went on market, and currently we have close to 100 customers, out of which maybe 12 or 15 are paying us. And from the buyer end, it was a difficult task for us because it is again always a chicken versus egg problem. I go to supplier, supplier says, who are your buyers? And if I go to buyers, buyer says, you don't have a supplier on board. So it was a kind of a mixed emotion I underwent last 6 months. But of course, there has to be a start somewhere. We had that start, and things are going, but not on a multiplier effect, but it is going on a very linear way. So that's where I thought I'll get in touch with you to understand how do we position, because I had bootstrapped it so far. Whatever savings, I left my job November 2015, and from there, whatever savings I had, I built this product, and whatever we don't have a marketing spend from our side, but whatever is possible from our side, we did a bootstrap and things like that to gain this particular. We came to this level, and when it was in idea stage, to be very honest with you, the biggest venture capitalist wanted to invest in a company. I would rather name them. Matrix Partner was the first to approach us. It's a fabulous idea. We would like to come in, but we would like to come in a stage where you get attraction. So getting attraction, you need to spend more on marketing. And that's where we got stuck.
So Shivanesh, what did we discuss earlier? Vaclav and I talked about VCs wanting to come to the rescue of victory. That's exactly the phenomenon. No investor invests in companies that doesn't have some level of validation and some level of clarity on how this company is going to scale from $0 to $100 million in 5 to 7 years. That's what VCs are looking for. With the kind of slow growth business that you are building, that is not a venture scale business. That is not the kind of business VCs should be investing in, and they won't be investing in it. So you're going to need to crack the code on a bunch of different things, and most likely you're going to do it without any venture capital at all at this point. Because there's nothing in this company at this point that shows signs of being fundable. So the real code that we're going to need to crack is, how do you get suppliers to come on board? Typically, suppliers are more likely to come on board, and in some cases, you're going to have to give the suppliers a certain amount of time, maybe for free or on discount, so that you have enough suppliers to then attract customers with. Because otherwise, you're kind of doing a bit of a marketplace, but you're trying to do it with a subscription, right? So you want suppliers who want that marketing exposure. And without suppliers, you're not going to be able to get any consumers. So the side that you're going to get in first, you're going to need to get in first are the suppliers, and you're going to need to tweak your pricing and your offers and your supplier acquisition strategy to get those a critical mass of suppliers onto the platform first and foremost before you can get the customers in. And that's just how any kind of two-sided marketplace business works.
One thing to add from my side, I think, even this pitch could be a good reflection that you can really see that me and Tramana, we have hard time to understand where is your differentiator, right? So maybe there is, but we have hard time to understand that. So what I would recommend you also is to work more on your pitch in terms of how you are different, what makes your business so different that it would fly like crazy.
And I do think that what Vaclav said earlier, Shivanesh, you need to listen a bit. If you are going to talk, then there's no point coming here. You've already explained what you're trying to do. We're trying to give you some feedback which can help you steer this. So what Vaclav said earlier and what we discussed earlier about getting more specific and more niche, get a critical mass in one niche that is in high demand. Like a lot of companies are looking for suppliers in a particular niche. Figure out what that niche is and get a critical mass of suppliers in that niche so that people start coming to you to recruit suppliers from that niche. And then that will be a reason why the customers are going to come to your platform, and then you can build up other niches as you go along. But to get going, you have to get one niche that is really powerful and that is of great interest to the customers.
Yeah. And that niche could be healthcare, it could be automotive, it could be manufacturing, it could be telco, it could be whatever. And as I advised earlier, when you choose the niche, get a person from that niche market, buy the know-how from the niche market, because everything that is general, let's say horizontal market, everything has been invented. Where the future for the companies is, where you combine vertical markets, when you take healthcare and IT or something like that. So you have your IT skill here, but you need to combine that with the specific vertical market, let's say automotive, right? So if you get yourself, and you can talk to all the different people in the procurement there, and you'll find, okay, here is where I see the opportunity, let's say automotive, and get that partner, and then you say, okay, I see an opportunity here, I need to get that person, because that will help you to really understand and bring more value, differentiate yourself, and take off.
All right, we're going to have to stop there, Shivanesh. Good luck. What you have built so far can be steered to an accelerated growth, but there are things that you need to do, and if you hang on, we can talk later about, we can do more Q&A later, we can explain to you how to use the program to do the kinds of things. We now do need to move to Akshay Sachdeva.
Yes, I'll do that. And getting a word of mouth from you that it can be accelerated gives me a good motivation back.
Great. Excellent. All right, Akshay, you are next. Thank you, Shivanesh.
Thank you so much. Do take care of it.
And Akshay, thank you for staying up so late. You are really a trooper. Please go ahead.
No, all good, all good. Can you hear me?
Yes, we can hear you.
Okay, great, awesome. So the business name is Growth Wizards, and the value proposition is premium marketing services delivered by top quality growth experts. And that's my website, and that's my email, and I'm currently located in Melbourne in Australia. Next time. So the target customers, startup founders and small business owners, and usually, they have a revenue of between 1 million to 10 million, I'd say. That's the market that I'm aiming for. Usually between 5 to, I guess between 2 employees to what, 20 or 50 employees. The problem is that, startup founders and small business owners located anywhere in the world don't always have the skills, time, or experience to market their business effectively. More importantly, they may not have the resources to hire someone full-time. And even if they do, there's always gaps to be filled when implementing a marketing strategy. So by that, I mean, like, they may have a director of marketing or a marketing manager, but they always need help or an extra pair of hands to fill in the gaps with their marketing strategy, whether that's blog writing or whatever it might be. Customer solution is productized.
Akshay, I have a comment here. Again, I think Vaclav would probably agree with me that, again, you need to, if you really want to productize marketing services, you're going to need to zero in on a vertical within, you're saying startup founders and small business owners. This is a very generic, story, right? If you, let's say a car dealership, there are lots of small business owners who run car dealerships, and they don't have a lot of marketing expertise. So if you specialize in car dealerships, you can productize. If you specialize in e-commerce businesses, small e-commerce businesses, you can productize. If you specialize in any other kind of, like if you specialize in nail salons, if you specialize in restaurants, you specialize in various different niches, there are specific types of businesses. The minute you go broad, it's going to be impossible to productize, and you would need to design custom services for every single company that you go after.
I can't agree more. One thing what I would add is, and we've done similar thing in the past, and what I've learned is it's okay to start broad if you understand that you need to be focused, because there are so many verticals, and you don't know at this moment, you don't know which one you want to pick, and that's okay. But you need to know that you want to pick one or two, and go broad, try it. I say, try everything, try all the different segments, and where you have good traction, grab that one and start focusing on that one. It's okay if you don't know at the beginning which segment is yours. You need to find it somehow. One way to find it is just try it everywhere and see where you have the biggest traction.
And also look at your own expertise. Where do you have expertise? Where do you have passion? Where do you have creative ideas? I mean, it could be that you like to market bed and breakfast. So then you do your entire customer acquisition strategy around marketing bed and breakfast. So you have to decide what that vertical is, but you have to pick verticals.
I completely agree with you. I think that's a very, very valid point. And, what I've currently got on the slide is actually where I was aiming to be. I'm actually currently operating as a content shop. So if you, on my website, I don't actually, I'm not currently a full service productized marketing services provider. I'm just focusing on content creation, where I am creating really high quality blog articles, infographics, explainer videos, ebooks, and white papers. That's it, just 5 offerings at the moment. But I'm in the process of becoming clearer about my longer-term vision, and I feel that this, becoming like a productized marketing services provider was one direction where I become a marketplace in the longer run. I don't know if that's the right way to go.
I prefer your previous direction. This content production services, right now, if you're trying to market anything, content is a very big part of that marketing strategy, because that's how search engine optimization works. That's what brings people. That's how you get, you publish stuff on various different platforms, and, you get your name out there. You get people to engage with your content, and that's one of the big ways that marketing is evolving. So I think that I kind of feel like that is a much more differentiated value proposition than integrated marketing services, number one. And number two is, if you take that content direction and apply a vertical strategy to that, that is a much sharper positioning. Like going back to my bed and breakfast example, if you go to bed and breakfast in different parts of the world and tell them that, hey, we're going to develop content for you so that you can market your bed and breakfast. And we are very good at developing content that are specific to marketing bed and breakfast. That would be a very compelling pitch.
Yeah. From my side, WhatsApp could be your potential customer. We have a company in Australia. That company is about $3 million revenue, so that exactly fits there. And the first part, I was really listening, and it was like, yeah, I missed, if you say we are in printing business or 3D printing business, the vertical market that is related to me, I was like, yeah, this is interesting. Now, when you go this direction, I'm starting to feel like, yeah, I've heard it many times.
Yes, yeah. Yeah, I mean, I guess, so at the moment, I've just been trying to focus on that one thing, which is, content creation, and, the market has been tech startups, and, any startup that wants to build an audience online through content. But I have some concerns regarding the longevity and sustainability of that, of just focusing on content, because at the moment, content seems to be like the in thing, and in the marketing world, every marketing channel seems to have a diminishing return on investment over a period of time. And when I read all these reports where only 30 or 20% of marketers say content marketing is actually working for them, I feel like it may just be a fad that will eventually not be as strong a marketing channel as it is today. So
if
I
you
was
do,
like, okay,
Akshay,
yeah.
If you, it's not clear to me that you really understand content marketing. We understand content marketing very well because that is our primary marketing. If you understand content marketing, if you really develop a workflow and a really sophisticated offering around content marketing, that is one of the things that is poorly understood and people are looking for help with. So the first order of business.
I have a question for you, actually. So imagine that I want help with content marketing. Okay, so we're in this 3D print management industry, and I just don't get how can you possibly pull out content for me, because you know nothing about that industry, and I distrust right away because I think like this guy is doing everything. How can he possibly know anything about this one?
Absolutely. I have two answers to that. So, well, 2 points to my answer to that. The first is that if we know nothing about your industry, we'll usually combine the thoughts of a subject matter expert with the skills of a content creator. So if you're the subject matter expert in 3D printing, we'll collaborate with you. You'll give us a brain dump of all the thoughts and all the ideas that you want to include in that content piece, and then it's quite easy to write it from that point on. So you don't actually spend all that time to create the piece of content yourself. You're just giving your ideas and thoughts. So that's one route. The other route is it is actually quite feasible to conduct research online and create a pretty decent piece of content based on what's already out there. It's much like it's kind of like seeing what's already out there and giving our own interesting twist or our own interesting spin to an existing content asset. And we've done pieces on topics that we've never actually known anything about, like really technical aspects of e-commerce and all that. And we've been quite successful in creating good quality content despite not knowing much. So yeah, I would say it's a combination of those things. And lastly, I'd like to say that if content is your business, like if you're in the business of if content is the crux or the core of your business, then I would not recommend even to my clients to outsource to us, because that's their product. But if content is your way of building a community online and your own product or service is something different, then there's a good fit with us. And we kind of work as an extension of at the moment my market, to be very specific, is actually not startup founders and small business owners. It's content marketers themselves, because I'm kind of supplying the muffins to the coffee shop, to make if that makes sense, rather than being the full service coffee shop myself. That's what I'm currently doing, but I'm curious to know the long-term vision, which is why I wanted to get on this call and explain my vision and hopefully get some ideas on how I can grow this, or whether maybe I am already on the right track. I'm not sure. I just need some reassurance on that.
You need to, see, content marketing is not just producing content. Content marketing is producing content, then you have to distribute that content through social media. You have to manage all sorts of content syndication relationships and blah, blah, blah. There's a lot more sophistication, and if you're talking about a full service content marketing outsourcing flow, then it needs to cover all of those pieces. So you need to understand those pieces and productize them.
And again, going back to the vertical, because when you delivered your speech, I was thinking like, okay, that sounds like the typical marketing agency that takes a lot of money from me, takes whatever I want to do, and the marketing agency typically doesn't have no idea. So what they do is that they go on the market and they try to buy that as cheap as possible so they maximize their margin and sell that for me, and that's not a value add. But if you are in that particular vertical, if you provide it yourself, then this is value add.
All right, we're going to have to stop, Akshay, and go to the next presentation. We can continue the conversation later. Just hang on, and I will explain how to, continue the conversation. We have one more presentation to handle. Thank you, Akshay. We're going to Terrell Anderson.
Thank you.
Go ahead, Terrell.
Good morning. How are you?
Good morning. Good.
I'm Terry Anderson. I'm COO of Donor Concierge, and we make babies. We help infertile couples find egg donors or sperm donors or surrogates. Our clients, our primary clients are consumers, people who are infertile. We also work with donor agencies who we don't have any donors ourselves. We're a search agency, so we work with the donor agencies, and we look on their databases. There's about 100 of them. And when we find the right donor for our client, we refer our clients to them. We also work with fertility clinics. There are about 450 fertility clinics in the United States, and about a third of our customers are referred to us by the fertility clinics. And of course, once that intended parent finds the donor that they need, or the third-party component that they need, they're referred back to that clinic. Our value proposition is, to this point, we've been a pure service agency, which is we provide our service to the people who come to us. We're creating a national database of egg donors, sperm donors, and surrogates. Right now, it's a very fragmented market. We are the Google of fertility, but we're a human search engine. That is, we have case managers who literally sit in front of computers, and for a client, we will search through almost 100 agencies on their behalf. It's time intensive, and what we're doing is creating that national database so that ultimately consumer can go to that database to find what they need. In addition, there's a number of related services to fertility services, such as DNA testing to make sure that the embryo that's created and ultimately the child that's created is healthy. We also help people navigate the intricacies of an unregulated market. While the medical side of it is regulated, the business side isn't. Anyone with a business card and a website can create an egg donor agency or a surrogacy agency. Some are more competent than others, part of what Donor Concierge's value proposition is. We know this market, we know the good players and bad players, and we help people navigate it. What we believe also is our value proposition ultimately for agencies is agencies tend to be great on the human resource side. They're great at identifying donors, who are these young women in many cases, or surrogates, or sperm donors. They're great at identifying them and shepherding them through the process. They're not as good at marketing. They're not as good at technology, which is what our database will provide for them. And clinics, when the IVF process is a long and painful and emotionally exhausting road, and when nearing the end of that IVF road, the doctor may say to the intended parents, your eggs aren't viable, so you need to use an egg donor. And at that point, about half the people drop out. And so the doctor loses a client, or they get stuck, struggling with how to take the next step. And so what we do in working with these clients is help them through the decision-making process. We've helped thousands of people do that. We'll help them do that. Next slide. The market segment that we're looking at, first and foremost, it's the intended parents who need third-party IVF. That's infertile straight couples. The typical client is a woman in her mid-40s. She has leaned into her career. She's achieved everything she set her hand to. She's ready to have a child, and her body doesn't comply. Once you hit age 40, fertility rates plummet dramatically. Another element of the market is singles who have not met Mr. or Ms. Right, but really want to have a child, and so they need the complementary biology. A woman will need a sperm donor, sometimes a surrogate as well. An emerging part of the market, about 20% of our clients, are gay intended parents. And as you know, gay marriage has become accepted, as it's become more socially acceptable, they're able to have children. And it's great for us because they need both egg donors and surrogates. And then there's international intended parents. The laws in the U.S., it's state by state, but the laws here are fully formed and favorable to intended parents. It's illegal using an egg donor, using a surrogate is illegal in some countries, socially unacceptable in others. So about a third of our clients are international. And it's without being too cynical, it's a way to have, if you have a surrogate here, it's a way to have an American citizen, because the surrogate would give birth to the child in the U.S. A secondary market for us is the agencies themselves. I alluded earlier, they're great at finding the donors, finding the surrogates, but the technology and marketing side, they're less effective at. And similarly with fertility clinics, we can help smooth part of their business. That's why about a third of our clients are referred to us by reproductive endocrinologists to help them smooth the process flow of taking that intended parent. Our acquisition strategy, it's I'd say 4 steps. Right now, as I mentioned a moment ago, we have case managers who literally sit in front of computers and search.
Doing it manually.
It's all done manually. We have already built the database, and we are using it internally to help make us more efficient. It cuts our costs. It allows us to have an increased range of services. The next step is our database is state-of-the-art both technically and from a user perspective. We've spent more money on our database than agencies can afford to. Our goal is to have them use it because it allows us additional services to provide, such as interagency trading and that sort of thing. The third phase, and we're in the process of the second phase now, the third phase is to offer these services directly to clinics, so that rather than sending a handful of their clients to us, we want to have them send all of their clients. And by not being constrained by the number of hours, by the way, it takes about a dozen hours to search all these databases, because we can do it in a couple of hours, we can segment our product offering so that even if somebody isn't as financially able as another patient, we can still provide a service to them that's helpful to the doctor. And then finally, and this is about 2 years out, our goal is to have a consumer marketplace. So consumer direct. Validation, we're the largest third-party search service in the country, which means in the world as well. We've served thousands of clients from countries around the world. We work with almost all of the existing agencies and clinics. They know us, they respect us. In participating in our database, 55 agencies have already agreed to participate. That's everyone we've asked. We're being strategic in how we ask people, and everyone who we've asked to participate has agreed. Doctors are referring to us, so they trust us. We do have the gold standard reputation. We also have the reputation for being Switzerland. Because we don't have our own donors, agencies are happy to work with us because we're referring clients to them. Our advantage, we have a great brand and reputation. We have long-standing partnerships. There's not an agency or doctor who won't return our call immediately. The technology on which we've built the system is state-of-the-art. It's a unique solution. And the system we're building is HIPAA compliant, which the existing agencies are not. Biggest challenge, and actually I will say another one before this, which is pricing. We know we should be value priced. The case managers who work with us many of them have their master's in counseling psychology. They tend to be givers by nature. We have to be thought, right now our average service is about $3,000. And to be able to deliver a $500 product, just how do we think about pricing and where to, and how to, we're not basing it on our costs, and how do we segment our pricing is something that we wrestle with constantly. And then fundraising. We have talked to venture capitalists, but you said this earlier in this roundtable that venture capitalists want something that will grow to a $100 million business in a short period of time. We're not that company. We hit last year close to $1 million in revenue. We see a path to $25, $30 million. We see opportunity beyond that, but a market that is arcane and that so many people it's a secret. People, particularly from traditional societies, don't talk about it. Even here in the Valley, we work with a number of clients who are high profile in Silicon Valley, but it's very hush-hush. We had one potential investor who was our client, and said, I would love to help you, but I'm not ready to tell people, my peers, that I'm using your services. So it's a bigger market than many people are
I think that point is actually kind of moot, because this is not a venture fund. If you're saying that you can you see a path to scaling this to about 25 million, and I need to look at those numbers. And as you pointed out rightly, that I think the productization and pricing of this company needs to be looked at very carefully. The good news is you have revenues, you have customers, you have a value proposition that is working. So from there, from that starting point, it's actually not that complicated for us to be able to help you through the other pieces. You clearly have something of value that your customers and your ecosystem values. Now we just need to apply some, well understood business principles to productize this and to set it up for growth. That's something that we are completely equipped to do.
Yep.
However, if the answer, after we've done that exercise of fully analyzing and fully figuring out what are the pricing models and what is the TAM and so forth, if the answer is that this is going to be a small business, and from the venture capital point of view, a $25 million business is still a small business. That's not what they're looking to build. Then your answer is that you're going to have to build this organically, and there are other forms of financing then that would kick in, whether it's, there are all sorts of SME financing that's out there. There's all sorts of, types of financing that are bank-related financing. There's all kinds of e-commerce financing. There's all sorts of other types of financing that can be explored. But first and foremost, we need to frame the business and the business model in a way that is more automated and then that is more structured to scale. And the pricing and the productization needs to be worked out. So that's where you are, and if you decide that you want help with that, we'll be happy to help you.
Okay.
From my side, look, Ysoft is where you want to be. Ysoft is now $30 million, right, in revenue, and we have never had venture capital. So you can do it. I mean, today, world is so much, and it drives me crazy. It's not about how much value you bring or how much profit, but how much you've raised. But it's not, the business is not about how much you've raised. So you don't need venture capital. Yeah, you can do it. Yeah. And I think your business has a second thing that you should also emphasize when you talk to potential investors or whatever, a community like that, is what is the potential of growth for that business? And if you look at how infertile rates are growing, I mean, people who are infertile, they grow like crazy, right? It is the biggest trend of the society. And if you further correlate the statistics, you'll actually find out that if you are educated, if you are higher positioned, i.e. higher earner, you are much more likely to be infertile than the other part of the society, right? So that all plays in your business case, and you should not underestimate these factors. Speaking of pricing, by the way, speaking of pricing.
Yeah, so have your children early. But it's
all right, Jerry, we need to move on. Unfortunately, we're kind of coming to the end of the conversation, and I'm just going to spend a few minutes. Your presentation, what you presented in terms of value proposition, and what you're doing and everything is very, very easy to understand, very clear to understand. It's the business side that needs work, and that's my parting comment to you. Don't get obsessed about fundraising, but you do need to get obsessed about tweaking and tuning the business side of it. And that's, I'm going to explain to you how to use 1M1M. If you decide that you want to use 1M1M, you're very welcome to, and we'll be happy to work with you on that.
Okay.
So folks, one request before we go into that is, if you like what we're doing here in 1M1M, bring serious entrepreneurs into the program. The word serious is in bold. There are lots of entrepreneurs out there whom we actually don't really want to work with, because they don't understand. They're obsessed about raising financing, and they're not willing to do the work required to get to that point of fundability. And today, that fundability point is farther and farther out. You know, the industry is looking more and more for validated businesses with traction and so forth. So this whole VCs want to come to the rescue of victory phenomenon is more and more acute. So if you don't have an understanding of that, and if you think that tomorrow you're going to go out there and next Thursday you're going to have a term sheet with 15 VCs bidding for your business, this is not the kind of entrepreneur we're interested in working with. Okay, in terms of resources, here are a bunch of resources. Let me just quickly run you through it, and then if we can do a quick round of Q&A just to cover everybody else's questions and comments. 1Mby1M.com is the website where you'll find everything that you need. There's a terrific blog full of case studies that you can learn a lot from. So in the case that we were just discussing, Terry's business, comparison shopping, meta search engine businesses have been built in other verticals for a long time. There are lots of well understood parameters and business principles in that style of business. So you can learn about how to build those businesses through those case studies. We also have the Entrepreneur Journeys book series that's available on Amazon. There are 12 books that each double-click on specific topics. So you can learn bootstrapping using services, which was the topic of today's interview with Vaclav and Whitesoft. You know, there's a book on that, and so forth, bootstrapping with a paycheck, e-commerce, etc. These roundtables happen every week. You're welcome to come to as many of them as you want. All the recordings are available. You can learn a lot from these. The full acceleration program is 1M1M Premium, and that covers extensive methodology guidance. We have a full curriculum, online curriculum that you can learn on your own time, and that coupled with private roundtables like this where you actually get to work on your projects with us. That's a combination of methodology training as well as project-based consulting. We help you with business development. If we have contacts in your industry, we have a very large Rolodex. We will be happy to introduce you to whomever you want to be introduced to. We will help you with financing, and the part of the process of financing is that you have to become financeable, and you have to figure out a financing strategy that works based on the business that you're working on. So there is venture capital, but there's also a lot of alternative financing models that you could tap into potentially. And then we also have media relations. We have a lot of clout in the media. If you need to get the word out about what you're doing to a large group of people, we can do that. We have a tremendous amount of media clout. Go to the website and go to the 1M1M self-assessment. And that's something that is going to give you a set of questions that you should be asking yourself. These are questions that investors would be asking you, but you are the first and most important investor in your company, and you may have no other investor. If you choose to grow organically and in a bootstrap mode, you may have no other investor in the future. But just by answering these questions and making sure that you have a solid business strategy, you will operate more efficiently, you will operate with much higher probability of success. Now, if you get stuck on methodology issues while you're doing the self-assessment and you just need to learn methodology on certain aspects of business building, you can go to 1M1M Basic, which is a curriculum-only subscription, $99 a month. You just spend, let's say, 50 hours or 100 hours in 1 month and digest as much of the curriculum as possible, especially the core curriculum. You will have answered a lot of your methodology gaps, addressed a lot of your methodology gaps. And, you know, you can do it at your own pace. You need 3 months to do 100 hours of studying. That's fine, too. Suit yourself. Anyway, go to the website, dig around. There's lots of information about what to expect from the premium program, what to expect from basic, lots of video FAQs and FAQs in general that will help you understand the program and see if it is for you or not. This program is not for everybody. It is for people who are capable of rigor, you know, rigorous learning, especially if you're starting early or even at any point of life. the first-time entrepreneur's journey is a tremendous learning curve. So having a methodology to apply that works, that is proven, is very helpful. And we have put this together by bringing into focus the journeys and the case studies of over 750 successful entrepreneurs. And the program is designed in video lectures, case studies, and roundtables where you get the project consulting. And it's been incredibly powerful. So use it if you decide that you can work in that mode. Our methodology is lean, capital efficient, bootstrap startups. Even if you raise money, it's going to be bootstrap first, raise money later. That's pretty much it. There are 2 roundtables in July, one in the beginning and one in the end. In the middle, I am traveling. And then in August, we have roundtables almost every week except one. So that's it. If you would like to ask questions, now is the time. We are 5 minutes over time, but just because we are approaching, holiday seasons and so forth, let's just go ahead and take your questions and make sure that we tackle. If there's anything in the audience that you would like to be answered, please go ahead and put your questions in the public chat, and Vaclav and I will take the questions. Meanwhile, if you have questions about the program, you can contact Irina at 1Mby1M.com. Irina Patterson will be happy to answer your questions. Anybody? Questions, comments, issues that you still want to discuss? And Vaclav, thank you very much for being here today. Your story is fabulous. Your coaching is fabulous. Thank you very much for coming.
Thank you for having me. It was a pleasure.
All right, folks, I don't see questions. So we're going to wrap up, and we'll meet you back here next week, same place, same time. Bye.
Bye.